Hi there, welcome back to Market Fatafat. Let's keep it going with all the top buzzers in today's trade. Let's talk about a stock that was doing pretty well for itself. In fact, it opened up with a gain of 3%, but now is trading in the negative, and that's Nykaa for you. A cut of 3.3% coming in on the flip side rather, and this is on the back of some weak Q2 earnings coming in. Revenue was largely in line with what we were expecting at 1,875 crores. However, it's a miss coming in on the PAT, EBITDA and the margins front. Now, marketing expenses have also gone up by 134 bips on a year-on-year basis on the back of new customer acquisition, investment in brand awareness, as well as category building. Their sales and distribution expenses are also up 37 bips on a year-on-year basis. When you take a look at the gross merchandise value, the GMV, that's gone up by 24% year-on-year overall, 29% year-on-year for the beauty and personal care segment, as well as 10% year-on-year jump coming in for the fashion segment. Let's also talk about what the management had to say in their con call. They're saying that brands are looking to moderate the discounts on the platform. Delivery performance has improved by 45% on all orders coming in. However, the ESOP and the GCC expenses are likely to hit the books by Q3, and the company is currently comfortable with the product mix as well. So poor set of numbers, but mixed commentary coming in from the management, and stock under pressure as we speak.
All right, now with that, we're joined by Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors, who's joining us on the technicals, and Janay, of course, is joining us back from our research team. Hi, Ashish. Thank you. Good afternoon. Thank you for joining us today. Ashish, then right off the bat, you've picked out RBL Bank for us. Now, this bank has been in a long, deep consolidation mode year to date. I mean, if you look at 45% decline on this stock coming in there, do you see a reversal from here on, or do you see a further downside on this counter?
Hi, afternoon to you and all the viewers. If you look at the stocks across the board, we can clearly see there has been a lot of selling pressure, and that has been resulting into selling across mid-cap, small-cap, banking stocks and every such thing. Even RBL Bank is down by more than 3% in today's trading session, and there is no recovery yet. There is no respite. That is what we can see. The stock started correcting from 250, 275 levels. It is now at 154, and there is no buying emerging. So I will rather use any kind of a pullback as a selling opportunity, expecting the stock to reach towards the target of around 135 on the downside. And on the upside, I think around 162 is going to be an immediate resistance.
Okay, so those are the levels to spot on when it comes to RBL Bank. But let's move on. Janay, you've picked out Kyal for our next, as your next stock for our viewers. Tell us, what's the news flow? It's an earnings candidate. Also take us through the earnings fine print then.
Well, definitely, if you look at the earnings fine print, revenue up 4% coming in at 453 crores versus 435 crores year-on-year basis. Also, operationally, EBITDA has jumped up about 32% coming in at 75 crores versus 57 crores year-on-year basis. Also, company reported a net profit of 18 crores versus 13 crores year-on-year basis. So, a slight improvement in net profit as well. The company reported that the pharmaceutical business demonstrated a robust performance. Also, combination of product mix as well as operating leverage have positively affected the margins, and the company reduced working capital along with the efficiencies have improved the cash flows for the company. If you look at stock price, the stock was trading up 8% at one point of time, currently trading above 1.5%.
All right, moving on to the other counter that is in focus today, and that's Ramco Cement. It reported its earning yesterday, and now we have Citi that's come up with an upgrade to buy from sell on the counter, and they've hiked the target price to 1,050 rupees from an earlier 750 rupees per share. Now they feel that the Q2 results have been ahead of their estimates. The EBITDA per ton is holding up on better costs, and Ramco appears to be balancing the market mix and costs well enough. The strategy is further supported by their growth plans. The EV per ton is at $115 per ton, providing a valuation support for the company. And on the back of that, they have upgraded Ramco Cement, but currently it is reeling under selling pressure, trading with cuts of 2.8%.
Okay, so that's the reason why Ramco Cement is in focus on the back of that brokerage note. But Ashish, you've picked out Lupin for us. Now, this is a stock that we're starting to hear more frequently on analyst radar as well. Tell us why this stock is, why we picked out this stock, or what are the levels that you're watching for this one? Because last 6 months it's been rather flat, not done much. So what's the direction that you expect the stock to head in now?
See, if you look at Lupin, we can clearly see that the stock has again started underperforming. And the pharma sector has been an outperformer, but Lupin has failed to do any kind of an outperformance right now over short term. So the stock is is under pressure over near term perspective. From a medium to long term, you can still look forward to buy the stock. But over short term, if you look at it, we can see that it has broken below the important support of around 2070 levels and maybe heading towards the level of around 1990 on the downside. So for looking the overall trend for now is on the short side for 1990 is the target, and one can maintain a stop loss of 2100 on the upside as of now over short term, but medium to long term perspective, any dip can be used as a buying opportunity.
Okay, so that's the reason why Lupin has been picked out by Ashish. Those are the levels that he is spotting. But on that note, let's also shift focus, talk about another loser, in fact, in today's trade, and that is Prism Johnson on the back of the numbers that came out. And that stock is also lower by 1.6%. If you take a look at what the consolidated numbers were on a sequential basis, revenue has come in at 1,685 crores compared to 1,763 crores, which is a cut of 4.4% sequentially. The net loss has also widened quite dramatically at 104 crores rupees compared to a loss of 18 crores. So that's an expansion coming in the loss as well, and that is what the street is not taking well. EBITDA has also come in at 46 crores compared to 132 crores, which is a big drop of 65% just on a sequential basis. And EBITDA margins have also shrunk quite drastically at 2.7% compared to 7.5%, a cut of almost 500 bips on just a quarter-on-quarter basis. So very poor set of numbers coming in. The net loss is widened, and that's the reason why the stock is under slight bit of a pressure as we speak.
All right, moving on from Prism Cement to IGL, Indraprastha Gas is what you picked out for us. Tell us what you see on the charts for this one. Again, a counter that has been in a deep corrective phase in the last 6 months. Tell us what are you penciling in on the charts for this?
Yes, if you look at IGL, we can see that the stock is trading in a broad range of around 446 levels, and on the downside, the support for the stock is around 402. The overall range has been maintained, and we can clearly see that it has not managed to move above. So I think after a sharp fall in IGL from 525 towards the low of 400, we are retracing that fall, relieving that oversold state, and now the stock is getting ready to be resuming the down move. So the targets on the downside is going to be around 400 levels for this stock. On the upside over short term, I think 431, 432 is the immediate hurdle. As long as that hurdle is maintained, sell on rise for 400 target.
All right, moving on from IGL to Power Grid, that is in focus today, and it is on the in focus on the back of a Macquarie note that is initiated and outperformed on the counter with a target price of 380 rupees per share. Now they're saying that the company is capitalizing on the capex cycle, and the proxy play on renewables growth is a big positive for the company. And after a period of slowdown, Power Grid is set to benefit from the sharp pickup in transmission capex. Now the sizable TAM rebound also allays concerns from competition on return on incremental capital invested in the transmission business. They also prefer Power Grid over NTPC, and on the back of this, Power Grid is in focus today, but mirroring the market breadth, Power Grid is also down and out, trading with cuts of almost 1% in trade.
Well, absolutely, positive brokerage note coming in, but the selling pressure in the market has gotten to Power Grid as well, and that stock is also trading with cuts. But Jinai, you've picked out Kirloskar Oil for us, another earnings candidate. Tell us how the earnings have fared and what the company what the company's outlook is and what the stock is doing as of now.
Well, definitely the stock is under pressure, currently trading up down about 2%. If you look at the earnings fine print, the revenue came up about 15%. However, it was a slight miss from the consensus estimates. The revenue stood up at 1500 crores versus 1305 crores year-on-year basis. Also, net profit grew significantly. It jumped up by 60% year-on-year basis. And operationally, if you talk about, then the EBITDA also jumped about 45%, coming in at 293 crores versus 202 crores year-on-year basis. Also, there was a good improvement on margins front, as the company reported an EBITDA margin of 19.5% versus 15.5% year-on-year basis. If you talk about commentary, company said it is cautiously optimistic on the demand, which is likely to pick up in second half given the low base of the first half.
All right, and with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back after the break to get you some more stocks that are in focus. Welcome back. You're tuned into Market Fatafat, where we're taking you through all the stocks that are in focus today on the back of news flow or on the back of technicals. So let's resume then with Reliance that is in focus today on the back of a CLSA note that is maintaining an outperform on the counter with a target price of 1,650 rupees per share. And they see that the stock is within the 5% of the conservative value and with a 30% upside with triggers that are lined up for the company in 2025. Now, the Reliance is soon to be launched. Solar PV Gigafactory is a major trigger that the market is currently ignoring, and using a peer valuation, the value of Reliance's solar business is at $30 billion, and the overall new energy is valued at 43 billion US dollars. Now, this is offset by 2 to 7% cuts in the FY25 to 26 EPS and a reduction in the value of the retail stock that is trading within the 5% of their conservative indicative valuation, which assumes a nil value for the new energy. And on the back of that, Reliance is in focus today, but again, mirroring the markets reeling under selling pressure is Reliance, trading with cuts of 1.5% despite the note.
Okay, so once again positive brokerage note, but market pressure getting towards stock. And Ashish, you've picked out Piramal Pharma for us. Now, this is a stock where that a lot of techies have been picking out recently for us. In the last 1 year, the stock has more than doubled itself as well. Can we expect the momentum to continue going ahead? And what are you spotting on the charts for this one?
Yes, if you look at Piramal Pharma, I think the stock has been outperforming, and not only now, we have been bullish on the stock even a week back and a few days back as well. We talked about it. The stock has been showing a very strong reversal even today. When the broader market is collapsing, the stock is managing to show a bullish sign and a bullish candle. So looks like it's at an important juncture, and the trend is reversing back on the upside for the stock. Over the past few days, there was some selling pressure. We can expect it to reach towards the level of 287 on the upside over short term, and on the downside, one can maintain a stop loss of around 248 levels.
All right, moving on then. Snehi, you have chosen a GSFC for us. Tell us, it's an earnings candidate. What does the result look like?
Absolutely, let's first take a look at what the numbers are looking like. We'll also take a look at some of the factors that have worked out well for the company this time. If you take a look at the numbers, the revenue has come in at 2,635 crores versus 2,163 crores, which is up 22% sequentially. PAT is also up 241%, which is 3.4 times. In fact, just on a sequential basis, a big jump coming on that front as well. 298 crores compared to 87 crores this time last quarter. In fact, EBITDA has also come in at 284 crores compared to 110 crores. That's almost double. And EBITDA margins have also expanded quite smartly at 10.8% compared to 5.1%, which is up 568 bips on a sequential basis. Turnover, however, fell by 13% and 6% year-on-year in Q2 and the first half, owing mostly due to the DAP and urea trading volumes. The company's achievements occurred despite ongoing external challenges in both of these sectors. The company also has the outlook of abundant southwest monsoon rainfall and high minimum support prices for key rabi crops that are set to boost demand on agricultural inputs next quarter for the company. So strong outlook coming in, very positive set of numbers, and despite a weak market, the stock is doing well, up almost 1.6% as we speak.
All right, moving on then, SK Bajpai, who's the CFO of GSFC, sees a good demand for fertilizers in the second half of FY25. He also believes that the company will be able to meet the sales target 9 months before the target. And let's go across and listen to what else he had to say.
Quite good for the company. We expect the same thing to be continued in the second half of the financial year. As you had rightly said, the good monsoon and the good purchase of the demand of the fertilizers will be there in the second half also. Q3, as we have already made the contact for the DAP, so sales performance will be also very good, and we will match the at least 9 months earlier figures of the sales turnover.
Okay, with that, Ashish, you've picked out Indus Towers for us on the technical front. Last 1 year on YTD, the stock have done well, but last 6 months and 1 month is where we've seen some corrective phase coming in for the stock. Tell us what's the direction that you are expecting the stock to head in? Do you believe there is some more correction due for the stock, or now it's time for the stock to reverse and log in some gains?
If you look at Indus Towers over the past many weeks, the stock has been forming lower high, lower low pattern that classically says the trend is bearish. We have not seen any kind of a positive breakout above the hurdle of even 330 levels over the near term, and that's why the stock still remains on the sell side. It's now at a very important juncture where the prior support was at 316 and we are just challenging that. If it manages to close below 316, then the next target for the stock opens directly near 300 levels, which is the low made on the election day in June. So the trend for Indus Towers is bearish. Avoid buying it. On the upside, the stop loss can be placed at 328 and aiming for the target of around 300.
All right, that's Indus Towers on the charts, but on the back of news flow, Tata Chemicals is in focus today because the company said its wholly owned subsidiary Tata Chemicals Europe has announced a 60 million euro or approximately 656 crore rupees capital investment to establish a new pharmaceutical grade sodium bicarbonate plant in Northwich of United Kingdom, approved by the Tata Chemicals Europe Limited board. The facility will have an annual production capacity of 180,000 tons and is expected to triple the TCEL's pharmaceutical grade sodium bicarbonate output in the UK. Now, the construction is set to begin in 2025 with the production slated to start for 2027. On the back of that, Tata Chemicals is in focus today, but Tata Chemicals also reeling under pressure with cuts of 2.5% right now.
Okay, so that's Tata Chemicals on the back of news flow. Jinay, you've picked out BSE for us. It's an earnings candidate. The numbers are looking pretty decent, but the stock is under pressure nonetheless. So take us through what the numbers look like.
Well, definitely, if you look at the numbers, it was a good set of numbers. The revenue sequentially grew about 23%, coming in at 746 crores versus 608 crores quarter-on-quarter basis. Also, if you look at the PAT, it soared up about 31%, and operationally, performance was the key highlight for the company as EBITDA soared 55%, coming in at 3,024 crores versus 1,950 crores sequentially, whereas the margins soared up significantly, expanded, grew from 29% last quarter to 46% this quarter. The company also iterated their focus which remains on increasing market share across all the segments. If you talk about stock price, it did open with a gap up of over 1% earlier today. However, currently trading with a pressure of about 3%.
All right, speaking of his portfolio model, Gautam Dugar, who's the head of research institutional equities Motilal Oswal, has named a few sectors that he is positive on. Let's go across and listen in to what he's overweight on and what are the sectors that he finds a bullish call on.
We've been significantly overweight on consumer discretionary in our model portfolio for the last 3 years now. Staples has been an underweight. In fact, except Hindustan Lever, we still don't have any other consumer staple name in our model portfolio. But our portfolio is full of discretionary names like Titan, Zomato, Indian Hotel, Metro, Cello. So those are the names that we've been holding. Even there, we've cut some weights. For example, in discretionary also, we used to hold around 11 total consumption stocks, out of which 9 were discretionary till July. Now we've brought down to 6 or 7 now, right? So consumption we have brought down from overweight, big overweight rather, to neutral. We are more positive on IT, we are more positive on private banks, we are more positive on real estate and industrials, which is where we have increased our weight. In fact, private banks, we have raised to overweight after 2 years in our October preview. Tech, which we were underweight till April, we made it overweight in July. In October, we made it even bigger overweight. So in tech, our weight has doubled in last 6 months. So we are not necessarily very positive across the board on consumption. It's select pockets in discretionary where our preferences lie.
Okay, so those are all the sectors in the baskets that Gautam Dugar is being watchful on and the one that he likes. But let's move on then and talk about 2 stocks that are in focus today on the back of a brokerage note coming in by Macquarie. Now, fresh initiations have been coming in by Macquarie on PFC and REC. First up, let's take a look at what Macquarie has to say on PFC. They've initiated the outperform rating with a target price of 630 rupees per share. They believe it's a cyclical play with cheap valuations, and the regulatory overhaul on account of cyclical power shortage has reduced the credit risk and boosted growth momentum for power financiers. Now, despite the recent rally, they expect PFC to re-rate given asset resolutions, lower slippages and increasing renewables mix, and the risk reward is more favorable for PFC than REC is what they're saying. Nonetheless, they've come out with a note on REC as well. They've initiated an outperform with a target price of 660 rupees. They say that REC is playing the benefits of a good cycle, and regulatory overhaul owing to cyclical power shortage has reduced the risk credit once again for all of these power financiers, and despite the recent rally, they also expect asset resolutions, lower slippages and increase in renewables mix to drive a re-rating of the stock, just like they had the view for PFC coming in. So that's a note coming in by Macquarie. Fresh initiations coming in on REC and PFC, but well, yes, the selling pressure has gotten into both of these stocks as well. Both of these stocks slightly under pressure as we speak.
All right, moving on to another counter that is in focus today, and that is NTPC. And Macquarie has initiated an outperform with a target price of 475 rupees on the counter. They also feel that the play on energy security and transition is very strong for the company. In fact, NTPC stands to benefit from both the energy security and the energy transmission themes. It also offers an attractive mix of the regulated capex and the renewables exposures, and predominantly the brownfield nature of the upcoming thermal capacity addition reduces the execution slippages risks. Also, the nuclear, could be on a longer term driver for the company, and the stock has had a great run over the past 3 years. But they remain impressed by the solid visibility for the company, and on the back of that, they've given up a thumbs up to NTPC, and on the back of that, NTPC is trading with gains of 1%. Totally bucking the market trend right now.
Absolutely. So that's NTPC in focus today. One of the stocks that is managing to hold on to the greens. But we also spoke with the management of NTPC Green on their upcoming IPO plans. Let's go across and listen into what Gurdeep Singh, the CMD, and Jaikumar Srinivasan, the finance director at NTPC Green, had to say about the growth roadmap for the company.
Hydro and nuclear is not the part of NTPC Green Energy. The NTPC Green Energy is on the 4 pillars, and those are solar, wind, storage, whether it is battery, whether it is PSP, and we are also working on the thermal storage and the carbon dioxide based storage system. Let's see how fast we can work on that. And going forward, there will be green molecule which will be coming into this, which may include green methanol, green ethanol, DME, sustainable aviation fuel, and green ammonia, and so on. Those things will be housed in the NTPC Green Energy Limited itself. Let me share here that we are working on our hydrogen hub in Andhra Pradesh, which is a place called Pudimadka, which is near Vizag. And we already have the land of around 1200 acres, which is coastal location, and this is being developed as a hydrogen hub.
All right, with that we have come to an end of Market Fatafat. Ashish, Junaid, thank you so much for taking the time out and joining us. With that, it's a wrap on this edition of Market Fatafat. Snehi and I will take care early. Thank you so much for tuning in. Don't go anywhere, because closing trade takes the action forward.
If you like this video, then like, share and subscribe to ET Now.